Hey, this is Mike Swanson of Wall Street Window. I want to show you something that's lining up in the stock market. One of my most favorite and useful technical indicators that I use is lining up to signal that the stock market is about to make a big move this week. We've seen lots of gyrations in the market that haven't meant anything, but that's about to change. So let's get right to it. I got to load up the screen so you can see the article that I put out on Sunday explaining the situation. Now, if you're not on my free email list, go into the description of this video and get the link, hit the link to subscribe, and you'll get these updates. They're completely free. Now, indicator I'm talking about are the 20-day Bollinger Bands. If you look at this chart of the S&P 500, those are the pink bands enveloping the candlestick price chart, and they're coming close together. That means the width of the bands is narrowing, and the width of the bands is also measured with an indicator on the bottom of this chart. You can see I've circled that. It's now below 4. It was above 12 when the indicator got very wide at the end of November, and now it's below 4. Hasn't been this low really since August, and now it's very low. Now, step back for a second, and you got to remember, if you've been following me, that a week ago, I did an update to explain why the stock market dipped the first week of January. You saw a lot of people in the financial media, if you're paying attention, say, oh, maybe the Fed's not going to lower interest rates as quickly as we expected, or inflation is going to explode, and this is why the market's falling. I said, no, the stock market was dipping because it came into this month with an extremely overbought condition. The RSI indicator on the top of this chart, which measures overbought and oversold conditions, reached its highest level in 6 years. The market went up from the October low to New Year's without any pullback at all. Extremely overbought. When that happens, markets either top out or they consolidate and go sideways to work off the overbought condition. That's exactly what we've seen in the first 2 weeks of January. And now the consolidation sideways pattern has caused the 20-day Bollinger Bands to contract, therefore making the width indicator fall below 4. Now, what are the Bollinger Bands? What exactly do they measure? Well, in the article, I've included a link that describes mathematically exactly what they do. So if you want to read all that, it'd take me a long time to explain the math behind it. Here you go. There's the formula. The important thing is that what they measure is price volatility. And since I'm using 20-day bands, they're measuring that over a 20-day period. And the size of the daily moves and and where the price is relative to various short-term moving averages. The math, that's how the math is generated. You can click the article to read all that. In another way to explain this really simple is that the market is going sideways. It's drifting sideways. And therefore the volatility of the market is compressing, it's shrinking, causing the bands to come together. When the bands come together, they will at some point expand, and then the volatility will expand, and that's when the stock market makes a new move. Now, this setup, it tells me that a move is imminent, most likely this week. We got earnings season starting too. And this setup is not happening simply with the S&P 500, but with many sectors inside of it and many stocks inside those sectors. So, for example, take a look at this exchange traded fund. RWR tracks REITs. the real estate sector, which is a sector I'm bullish on this year. I bought several REIT stocks in October and November. I've talked about some of them and mentioned some of them. I mentioned one of them in a moment. But look what's going on. RWR went from 76 all the way up to 96, a quicker gain than the S&P 500, a bigger percentage move, and it got also extremely overbought. In fact, its rally really stalled out before New Year's in the middle of December because it went up so much quicker than the S&P, and it's been consolidating. It's been going sideways. The Bollinger Bands have went from 16 all the way down to 2.5. So the move up from October was bigger than the S&P 500, and the volatility compression has even been greater than we've seen with the S&P 500. What this means is that this sector, if the S&P 500 moves, which is likely to occur, that makes a new big move, this sector will actually most likely move more based on what the bands are more compressed and the move before was bigger. So the stocks in this sector will likely move more than the S&P 500 itself. So that's exciting. Here's the thing about these indicators, though. They do not tell you in what direction the move is going to be, but so either the S&P will break down, the earnings will be awful, and some horrible news will happen of some sorts, and the S&P will get smashed down to its 50-day moving average at 4,600, or it will break out and we'll get a 100-point run, 200-point run for the rest of this month. Something fun. And then in some sectors and stocks, and I talked about REITs as a potential one, we'll do even better. Most likely the latter is what's going to happen because we're still in a cyclical bull market that started really at the end of 2022. And typically they last 2 years, at least. So I think, it's going to continue this year, and we're above the moving averages. We're in a bullish setup. So normally when things consolidate, you get breakouts when you're in this situation, and that's most likely what's going to happen. And people are looking forward to these low interest rates or cuts in the rate of interest on the part of the Federal Reserve. And people are going to buy stocks ahead of that happening in the spring. So here's a real estate stock I've been mentioning in some of my emails. PDM, Piedmont Office Realty Trust. I own it. You can see the compression in the bands. You can see how this stock peaked out in December, and ever since that December move, it's been trading in a range of 7 as resistance, or 750 as resistance, and 7 as support. If it breaks 7, it'll dump down to the 50-day moving average, at least at 650. If it closes above 750, I think we can see a run in the stock. Just as I do in RWR and so forth. So that's what I got buys on this week. Let's see if the market goes up. Let's see if the earnings drive it. The technical setup is there, where we should get a some nice action this week in the market, which I couldn't say that when this year started out, or last week either. We're in a different situation. The markets have been consolidating fairly successfully, and consolidation, if you think of the markets as a rocket, consolidation phases is fuel going into the rocket. And this week we can see if the rocket can shoot up. So let's see what happens this week. Like this video if you want more videos like this from me. And if you want my next video delivered to you by YouTube, hit the subscribe button, hit the bell next to that, and I will be talking with you later.